Yes, my people, back again with another YouTube video. In this video, I'm going to be doing a bit more charting on how I trade in the markets, specifically based off market structure. I know a lot of you have been wanting me to do some more charting videos. So yeah, I'm just going to be listening to the people and then doing that all for you. So let's get straight into it. Now, the reason why I started doing this video is because on the 31st of July, I was doing a live trading session with my Discord, Trading London session, and the structure for that session was just so clean. I put it on my Instagram story. I just had to make a video on it. It was literally so clean, and I think it was a perfect blueprint to show you all how I trade. So let's go. So, market structure is how I trade. A lot of people know this, they know what I'm about to show you, but a lot of you are still lost on the chart, and then you're trying to play it, you get confused. So I'm going to try and make it as simple as possible. So, right, market structure. How do I trade? Well, I look at highs and lows, and I look at breaks, and I look at failed breaks, and then obviously failed breaks, also known as sweeps. Also can be not sweeps as well, if we go near it, but we won't talk about too much, right? Or we won't confuse you all. So let's just talk about breaks, failed breaks, also known as sweeps. So in terms of breaks and failed breaks and highs and lows, I'm going to be looking at trends. A lot of you should know what trends are. It's very basic. A lot of people think it's beginner, but trust me, the market's moving trends all the time. Bullish, bearish, sideways. Literally, go on a chart, it's either moving up, down, or sideways, right? Very basic stuff. Bullish and bearish, of course. So, oops, I didn't mean to do that. So, if we're looking at a trend, obviously, if we're in a bullish trend, we're making higher highs. And obviously, we're making higher lows. As we can see, we're just moving up. This is our bullish trend. If it's a bearish trend, obviously we're making lower lows and lower highs, obviously like this. We're moving in a downtrend, as we can see. Now going back to breaks and fail breaks, what can we see is happening in this bearish trend? Well, we are breaking to the downside, as you can see there, and as you can see there as well. Now, when we do get these breaks, what I'll expect price to do is retrace back into the range which caused the break. Obviously, we can see from this high to this low, and then we can see the break line, which is here, right? So I would expect price to then come back into this range to then seek going lower and then making the new breakdown here. And I'll also be expecting this high up here to hold. Why? Because this created a new low, i.e. it's created a lower low in the market trend. Okay? Now, for then price to then come up into this range to then seek lower, I am going to need some type of confirmation in here based off market structure. So what am I going to be looking for? Well, during this retracement on the lower time frames, we're going to be seeing higher highs and higher lows, okay, within the big bearish moves, okay? So let's talk about the time frames rapid before we get into that. So in terms of the time frames, you've got your LTF, which is of course the 1 minute, the 3 minute, and the 5 minute is what I use. We've got the MTF, which is the mid time frame, and I use the 15 minute, 30 minute, and the 1 hour for that. And then the higher time frame, which I'll use for overall market direction, also be using it to align with the mid time frames as well in terms of, long-term structure, so on. That would be the 4 hour. 4 hours a bit more intraday, but still I would consider it a higher time frame. You've got your daily and you've got your weekly, and you've also got your monthly as well, which is a very big time frame, but still sometimes it is needed for, big outlooks, right? So they're the time frames. So ideally, let's look at this in terms of a 1 hour perspective, okay? If we can see the 1 hour is making lower lows and lower highs, during these retracements on the 1 to 5 minute, okay, the 1, 3, and 5, we're going to be seeing higher highs and higher lows internally. Remember, we can see the 1 hour is bearish, but within these pullbacks, they're obviously short-term bullish, right? So within this pullback here, we are going to be seeing price doing this, making higher highs and higher lows, higher highs and higher lows, right? So then how do we get the confirmation to then seek going to the next low? If we can see price, starting the retracement, when are we going to know that it's going to start coming down, right? Well, this is why I use market structure, okay? So, as we can see, like I was saying before, if we get a break, I'm expecting whatever caused the break to hold. So if we're getting a break to the upside, I'm going to expect this low to hold, price to come back into the range to then seek the next high, and then so on and so on and so on. But then, if we get a break in structure, right? where we can see we've been making higher highs and higher lows, and now price ended up making a lower low. This right here is our break in structure. I'm just going to call it a break to keep it simple. A lot of you are going to say market structure shift, change in character, break of structure. I'm just going to keep it simple and call it a break. Okay, so we get a break here. What does that mean? Well, now that this high up here has caused a break in the market, it's now created a new lower low. I will then expect this high up here to hold, price to retrace back into the range of the break, and then seek if we can respect this range to then continue the new structure, right? And then so on, and then so on, and then so on. And that is one of my confirmations for price. For price, seeking into a high time frame range, lower time frame then switching from bullish to bearish to then confirm we're going to keep and continue down to the next 1 hour low. That's literally simple. That's literally the most simple way I view a market. And I use this literally every single day. A lot of you even know this, but don't use it. It's very, very simple market structure. And I think you should all start trying to implement it into your trading, because it's a very, very nice and simple way to determine whether price is going to go to the next 50-minute, 30-minute, 1 hour high or low, right? Very simple. So now that we've covered that, we are also going to be talking about failed breaks, because these failed breaks can happen. Now, a failed break, also known as sweeps, the way that I view them is a lot of people think there is a break of structure in the market when there actually isn't, because they're not using their neighboring timeframes. Let me explain, right? So, if for instance, we can see here price created a low like this, okay? And let's say this is the 15-minute time frame, right? 15-minute time frame here. The 15-minute time frame may look like it's a break, right? There could be like a 1 candle closure. But obviously, everyone knows, everyone is taught this, that the higher the time, the more power it has, okay? Everyone knows this. So you need to remember to use that, okay? So let's say the 15-minute, there's like a small break, like a small candle closure break like this. But then if you go to the 30-minute time frame and price is literally just a wick like this, okay? We will obviously deem that as a sweep. Now, is a sweep a break? No, it's a failed break. So what does that mean for this high up here? Well, it means that this high has actually failed to put in new structure. Remember, I trade based off market structure, okay? Highs and lows. So this high has failed to actually put in a new low. That is an indication for price to then target towards that high up here, and a potential indication for price to then switch and reverse in structure, okay? So if we get a sweep there, and then obviously we get lower time frame confirmations within here, for example, we can see this big bearish leg, right? So that means on the lower time frame, let's say the 1 minute time frame, it's going to look like this, isn't it? So then if on the lower time frame after the sweep, price then switches in structure like this, right there, from lower lows and lower highs to now higher highs and higher lows, that is a confirmation for price to seek towards this high up here, okay? So they're the most basic ways I view the market. Now that I've shown you these drawing examples, let me now show you onto the charts. So as you can see, this is DXY, the dollar index, on the 30th to the 31st of July. And as we can see here, we've got this low and we've got this high up here, right? Now, from the low to the high, did we create a break in structure? Yes, we did. We can see from this high here, we broke. Okay, how did we break? Obviously, we made the pullback, then price came out, and we had some strong closures past it. So this right here is our break. Like I was saying in the drawings, what do I expect? Well, I expect price to then retrace back into the range, into the break line of the break, as we can see there. Right, we come into the range to then seek out and push towards the next high, which is obviously up here. But like I was showing before, how do we get the confirmations for price to then seek for the next high? We can't just randomly predict price is just going to retrace into anything. It could be a zone that you're looking at or anything. How do we actually properly determine it based off market structure? Well, we go into the lower time frames. So if I now go into the 1 minute time frame on DXY of the same range, we can see here, price retraced into the range, after we caused the break. Then what happens here on the lower time frame? Well, if I do some drawing, we can see here, we've got this low, we've got this high, okay? Then what did this high do? This high made a lower low. Why? Because it broke past down here. Price comes up and then down, then up and then down. So we can see here on the lower time frame, we're making lower lows and lower highs. Okay. Then what's important is what happens down here. We can see this high up here created a new low. We broke this low. Then what happens to this high? This high got broken. Okay, what is that? That's a shift in structure. We've gone from lower lows and lower highs. Now we've made a higher high. And as you can see, that high is all the way up here. And this high also even broke past this high too, as we can see. Okay, so we've now made a big higher high up here from this low. So what's that? That's our shift in structure. What does the price do? Price retrace back into the range after the break to then seek out and push for the next target. Obviously, this is going to be this lower time frame structure. And it's going to keep doing that, keep doing that, keep doing that. But right here was our confirmation for price to seek towards this high up here. Okay? Hopefully you can all understand that. As you can see, price perfectly from literally 8 a.m. on Thursday, the 31st of July, all the way to 3 p.m. straight up bullish. We had one pullback, but straight up bullish towards this draw of liquidity, which is obviously this high here after we had this break here. Very, very simple stuff. Okay, I did this live in my Discord as well. Obviously, if I show you in GU the examples, and obviously I'll show you that, completely fine. But now let's look at it on the GU perspective. As you can see here, 31st of July, GBP USD. If I go on the 15-minute time frame, we can see right here, we had our break in structure. We can see price, we had the pullback and price came down. Okay, so this right here is our break. Then what did price do? Price retraced back into the range from the break. Okay, on the lower time frame, if I go on the 1 minute, this will be making higher highs and higher lows. We will then want to see a shift, a break in structure to then confirm we're going to be targeting towards this low down here. So let's get into that. So now this is the 1 minute on GBP USD. As we can see here, we've got a high, we've got a low, high, low, high, low. We can see overall the direction on this retracement is higher highs and higher lows. So what will we need? We will need now a lower low to determine price going towards this low. As we can see here with this red line that I've already previously marked, we had our break in structure. Okay, not like this. This wasn't a valid break in structure up here. Why? Because we can see on the 1 minute time frame, you know, we've got a close. But then if I go to the 3 minute time frame, we've got a close. And I cut that bit out when I'm bear rushing. And then I'll say, but if we go to, But if we go to the 3 minute time frame, which is obviously a higher time than the 1 minute, we can see we don't actually have a valid close of this high. So what is this? It's a failed break. It's a sweep. Again, if we get a failed break, we get a sweep. Oh, no, wait. Yeah, just keep cutting it when I'm like bare lost. Again, if we get a fail break or a sweep, the next draw is the low or high which failed to make the new structure, which is obviously this low down here. This low failed to put in a new high, so that's the draw for price. And as you can see, price came down. However, which low did actually create the new high? This one right here. As we can see, we had the break here with this red line. This low created the new high up here, this break in structure. What ended up happening? Well, we can see price broke down. So now what does that mean for this high up here? Expecting it to hold, price to make an attempt to retrace into the range to then seek lower and keep doing that again and again and again until we hit our mid time frame draw right here. And to show you that I did this on a live approach, as you can see here, London live session, 31st of July. This was my approach, the retracement and then moving down. And then as we can see here for the 1st of August over here with this setup, we can see obviously price makes the break, price comes up back into the range, and obviously then in this case scenario, we're just showing continuation. We're not needing any shifts because we didn't really have any bullish retracement, just continuation, break there, coming back into the range, you know, valid entry set up here to then see it down towards the lows. Very, very simple stuff. And just something quick to show you all on AUD USD. As we can see here, I've got this set up from this break, from the high to the low. I don't trade this pair. I don't really trade this way either. This is just someone in my live session which showed this based off what we were going off DXY and GU, etc. Because at the end of the day, they're all correlating against DXY. But as we can see here from AUD USD, I'll just do a little brief on it. As we can see here, on the 15 minute, we broke, high, low, retracement, bullish retracement. Obviously, this was an entry model someone in my Discord and my live session was showing. But then, as we can see here, from the bullish retracement, we're getting higher highs and higher lows. To then, we get this low getting broken. After that gets broken, as you can see, price goes straight down. Why? Shift in structure using the mid time frame with the lower time frame together. This is how I approach the markets every single day. Mid time frame to lower time frame alignment, mid time frame to high time frame alignment, and so on. Okay? Very, very simple stuff. A lot of you know this, but a lot of you are still, still struggling when you get onto the charts. You don't really know what to look for in terms of price direction. This is simply what I do. Based off highs and lows, breaks and failed breaks, lower time frame to mid time frame to high time frame, all aligning, using DXY, using GU together. This is how I trade. Very, very simple stuff. Obviously, there is a lot more to it. I will admit. But again, this simple blueprint will definitely help you all in terms of market direction, determining where price is going to go, etc. All of this type of stuff, right? So just to quickly conclude, market structure, how I trade. Based off highs and lows, breaks and failed breaks, also known as sweeps. Obviously, the trends, bullish and bearish, you all know this. If the price is moving in a downtrend, making lower lows and lower highs, the retracement's obviously going to be making the opposite, higher highs and higher lows. We need that shift in market structure to determine the next draw, the big low, the big highs, and then trade towards. And then after that, you can get your setups towards that. Very, very simple stuff. Lower time frames 1 to 5, mid time frames 15 to 1 hour, and the high time frame you can use the 4 hour to the monthly. Okay, that's how I trade. Very, very simple stuff. If you want to learn more types of trading, obviously I do have the mentorship in the Discord. The link will be in the description as well. If you do want more charting videos like this, going over different types of topics, etc., leave a comment down below as well. And also for more video ideas, again, leave a comment down below. But yeah, don't forget to like and subscribe. And yeah, tune in for more YouTube videos because I'm definitely trying to go out on attack with this, trying to get some more frequent, consistent uploads for you all. Give you all a little bit of sauce, give you all, insight in my life as well. But yeah, I'll see you next time. Take care.